In our presentation today, we will discuss how to protect your person and your assets against financial loss. Insurance is a financial tool that transfers risk and related expenses to a third party. There are many different types of insurance. Each one has a specific purpose. We will highlight a few categories throughout this presentation. Your compensation package could include insurance that covers health, disability, and death. It is important that you become familiar with your options and select coverage based on your household needs. We will focus on two important employer options: medical insurance and disability. Major medical insurance is the type of insurance most people are familiar with. This type of insurance is designed to protect you when you get sick or injured. There are many companies that provide this service. As clergy, most of you will be offered some type of medical insurance as part of your employment package. You need to be an informed consumer. You will most likely pay some portion of the premium, which is the cost of insurance. This cost will be deducted from your paycheck. In addition, you will need to become familiar with the plan to understand your deductible, your copay, and your maximum amount of out-of-pocket expenses. If you are over age 65, Medicare will become available to you. Part A starts even if you are still working. Part B and D will become available after you have stopped working. Most people need a supplemental insurance plan to go alongside Medicare. This supplemental plan would cover the gap between what Medicare covers and what is out of pocket. Protecting your assets from accidents or disasters is a way that we take care of the whole picture. If you are insuring yourself for your health, then insuring your assets would be the next step. If your home or car were damaged, you would need protection so that you could continue serving God. This type of insurance protects your home and the transportation needed to make sure you can still do ministry. There are many sections to a homeowner's insurance policy: coverage to basic property, to others on your property, for loss in case of fire or other perils. Basic property includes the home, other structures separate from the home, such as a shed, and personal property within the home. Property may be repaired or replaced if there is damage or loss. Liability coverage under your homeowner's policy assists with protecting assets and covers legal costs from a lawsuit due to injury or damage caused to other people or their property. Causes of loss or a peril could be from fire, lightning, windstorm, hail, riot or civil commotion, just to name a few. Be sure to know how your policy handles perils for claim purposes. The insurance policy may state what perils are covered or that all perils are covered with some exclusions. Common exclusions are flood and earthquake damage. The coverage to rebuild damaged property could be based on replacement costs, what it would take today to replace or rebuild. Or it could be based on actual cash value, which is today's cost less depreciation. The greater value comes from replacement cost. Many who rent a home or an apartment don't realize that it is just as important to have renter's insurance as it is to have homeowner's insurance. Your personal property is within the walls of the rental property, and if you are unable to reside in that home due to a natural disaster, you need to be protected. Also, if someone comes to visit you and is injured on your property, this insurance will help to cover those costs as well, just like in a homeowner's policy. Auto insurance ads are everywhere, on the internet, television, and radio. It seems almost impossible to figure out what you need and who offers the best value. These next two slides list the types of coverage that you would need to be fully protected. Many companies now offer online quotes with very simple tutorials to guide you. This makes shopping for auto insurance quite simple. The companies that offer an online quote for rates will provide you with baseline coverage options as you scroll through. They will give you examples of how much protection you might need in a given situation. It's hard to imagine becoming so disabled that you might need to leave your job for a time. Short-term disability insurance covers you if you need surgery or have an accident, for example. Long-term disability insurance covers you if you become more permanently disabled. The key is knowing if your disability policy will cover you if you cannot work in your own occupation versus your ability to work in any occupation. The more specific the policy regarding your own occupation, the better coverage you have. If there is a waiting period for coverage to begin, you will be responsible for making sure you have enough income during this period to pay your bills. The amount you receive may be reduced by Social Security disability payments or by other income you receive during your disability period. Coverage typically ends at age 65. Life insurance has several purposes. It can cover immediate expenses like funeral costs or covering debt, act as an income replacement for the family, used as a way to save money for college or retirement, and allow you to transfer wealth to your loved ones. There are several types of life insurance that you would need to become familiar with. There are three major types of life insurance: term life, whole life, and universal life. Term life covers a certain period, like 10 years, 20 years, or even 30 years. With term, you may be thinking of having coverage until your children are adults and can care for themselves. Once they are adults, you may no longer need that amount of life insurance coverage. Typically, these policies are less expensive than whole life and universal life policies. Whole life is just that, coverage during your entire life. A death benefit is transferred to beneficiaries upon your death. There is also a savings component to whole life. Like whole life, universal is a permanent policy, your policy until death, with more features than a whole life policy, such as flexible premiums and adjustable death benefits. No one likes to think about a time in their lives when their families are stretched to be able to care for them. With our population rapidly aging, it is something that we are all becoming more aware of. Long-term care insurance provides for nursing home care, home health care, assisted living care, and adult daycare. It is very important to read these contracts very carefully, as they are all quite different and offer different levels of coverage, and may omit certain types of coverage as well. Because the policies can be so different, here are a few considerations before you sign on the dotted line. Think carefully about what needs might arise in your own situation. The daily limit is the most the policy will cover per day. $200 per day can be typical for long-term care facilities in urban areas. Coverage for some policies may not start until 60 or 90 days, could be shorter or longer in time, after the claim has been filed. This is called the elimination period. You would be responsible for paying the long-term care costs during this time. The benefit period says how long you would have coverage, typically expressed in years. Lifetime coverage is becoming very uncommon. It is important to know what triggers, such as dementia and the inability to bathe oneself, as examples, will meet approved conditions to file a claim. Protecting yourself against financial loss is a critical part of financial planning. It is just one additional way to care for yourself and your loved ones responsibly.